The chancellor has announced new temporary changes to stamp duty, but what does this mean for you? Essentially, the threshold, the point at which stamp duty becomes payable, has been increased from £125,000 to £500,000. This means you will only start to pay stamp duty land tax for the amount you pay for the property over £500,000. These rates will apply whether you're buying your first home or you've owned property before. However, there are a few things you should bear in mind. The first being that these rates are temporary and as it stands will only be in effect until the 31st of March 2021. Secondly, you may still have to pay the higher rate of stamp duty when you buy an additional residential property. These rates start at 3% and are in addition to the standard rates. Now, there may be instances that you will not have to pay the additional property rate. Say for example, the additional property you're purchasing is a caravan, mobile home or houseboat, or the property is located outside England, Wales and Northern Ireland, or the additional property is under £40,000. There are also certain rules which apply in the scenario that your residential property has been inherited. Please do remember there are also strict time limits that are still in place in filing your stamp duty return. You must pay the tax within 14 days of completion. How about purchases where you're replacing your main residence? You won't have to pay the higher rate if the property you're buying is replacing your main residence and that main residence has already been sold. If you buy a new main residence but the sale of your previous home is delayed, you will still have to pay the higher rates as you will still own two properties. In this instance, all is not lost. You can still get a refund for the amount above the normal rate if you sell your previous home within 3 years. But please do make sure the claim is made either within 3 months of the sale of your previous home or within 12 months of the filing date of the return, whichever comes later. If you're fortunate enough to already have 2 or more properties and you sell your main residence, you will not have to pay the higher rate if you buy a new main residence within 3 years. Finally, please do be aware that if you're purchasing any properties jointly with other people and any of them already own 1 or more properties, you'll need to pay the higher rates. Consequently, if you're married or in a civil partnership, buying a property and your spouse or civil partner already owns a property, you may still be liable to pay the higher rates, but you may be able to claim a refund if they then go on to sell it.